Live streaming is on.
All right, good afternoon, everybody. Event Trader here, and I am joined, of course, by options trader Brandon Mars for the option playbook. Brandon, how are you doing today?
I'm great, Gavin. How are you?
Yeah, no complaints, no complaints. We'll start off the segment here as we usually do, and that's going to be a little chat about the markets. And people get plenty of my thought process on what's going on here on the broader indices, Brandon. But I know that they'd love to hear from your end on some of the things that you're seeing out there. So right now we got a little bit of choppy afternoon action. We had highlighted that 44.56 to 44.62 area earlier with Jim, and certainly seems like we're going to get kind of stuck in that area right now going into the afternoon. Of course, CPI tomorrow. So, Brandon, I'm going to ask you two questions here. The first one is just your broader thoughts on the market, and then the second question is going to be on your thoughts on the final 2 hours here, or 2+ hours that we got going on with CPI on deck, and how, as an options trader, you kind of think of some big macro events that are on tap. But first off, with the markets, and we could pick whichever index you want to take a look at.
Yeah, I still kind of in the same camp that I have been. If you look at either the Qs or the SPY or any of the futures indexes, really, they're all looking pretty strong still. And, for me as a chart watcher, everything's kind of floating around there, maybe a little bit of a coiling pattern that we've been in here for a couple of weeks, holding on to the 20-day moving averages. For me, I pretty much remain in the bullish camp until we kind of start breaking down through some of those key moving averages. And, for me, not a perfect science here, but when I look at my 15 different watch lists that I have, and everything on it for the day is pretty much green, that usually is a little bit of an indicator that I might want to look up to the bullish side versus the bearish side. So as long as these charts keep looking strong, I guess we'll see with some of the inflation data that comes out this week. But for me, I'm still pretty much in the bullish camp. So for the next couple of hours, I guess maybe we'll see how bullish I'd want to get there. I mean, I think you probably summed it up pretty well. I'd say I don't know how aggressive people are going to want to get here before the report. Even though I think it's going to come in in line or below, like you said. Still, I just don't know if the big institutions need to take that additional risk prior to the report. So I'm just kind of watching the price action now. I mean, from an options standpoint right now, a lot of these charts, unfortunately, kind of look like they're just starting to really just chug along here real nice and slow on me, which, from an options perspective, you need to get a little bit of that movement to make money on your options. So I don't know how great the trading's going to be here. I got a couple of things I'm trying to take a look at here, but everything just kind of seems to be going nice and slow and steady and kind of flat. So, yeah, I don't know how many more great trades I'll be able to find this afternoon, but might maybe take a lotto or two, or not two, but maybe a lotto idea into the CPI report just in case it does come in cool.
With that, you would be looking more at something on the put side then?
I
Just for a
mean,
little downside protection, or you don't feel that you need to?
yeah, it would probably end up being on the call side, unless we got some sort of big breakdown, which kind of made me say, all right, who knows what's going on now, in the next couple of hours. But, again, just kind of being bullish like I am, I'd probably try to keep it simple and stick to the call side. But yeah, if all of a sudden I started to see a bunch of these stocks selling off, it would maybe tell me that somebody knows something, and I might change my tune on that. So I guess we'll see in the next, hour and a half, 2 hours.
Right. I mean, one of the things that I was thinking of, Brandon, here is when I was looking at the charts and just kind of looking back, if you take a look on a weekly, this just kind of has the same setup as April through May, I'm finding right now, where you had that little decline in March around the Silicon Valley Bank episode, right? And that seemed to just open up the opportunity for people to jump in, and you had that rally going on up through the start of April, and then we just kind of went sideways up until the middle of June. Really is when we're just kind of digesting earnings and just chopping down, and it kept feeling like we were going to break down and we are going to get a little bit of that pullback, and the bulls just kind of continued to keep us higher. And then of course we had that run up through the end of May and into June and into the 4th of July holiday, and now it just feels like we're getting back into that probing, going sideways, testing to see if there's a breakdown, testing to see if sellers are going to step in, and we just aren't seeing it yet. So for me, I think it's going to take a real poor Q2 or earnings season to kind of offset it. Otherwise, I see us chopping around in a sideways trade, and then pressing higher, perhaps going into the August months. So it should be pretty interesting.
Yeah, and I'd agree with you too. And I mean, if you look at the weekly on the QQQ, I mean, this maybe isn't textbook, and it's pretty small at this point, but I mean, that has a little bit of a triangle form to it. So, that would kind of give us that similar sideways, choppy consolidation action, which, at this point, what's the market up 40% this year or something? Taking a couple week breather is just healthy in terms of market behavior. So, if we kind of just keep grinding up and, we see some consolidation and maintain these levels, yeah, I would agree. Unless the Q2 earnings or this inflation data is really bad, I would think in theory we would continue on higher.
Yeah, it feels like we need something to offset it. And I'm just kind of keeping an eye these days too on this QQEW, which I don't know if I hadn't come across it before. One of our subs pointed it out because I talk a lot about the RSP versus the SPY, which is the equal weighted S&P versus the market weighted one, and the QQEW is actually the equal weighted NASDAQ, and that chart looks even better than the QQQs. Have you ever come across that QQEW?
No, I heard you talking about that earlier and kind of had that on my my radar to look at this evening. Yeah, just looking at it wouldn't really hit my radar because there's almost no options traded on it. So there's a little bit.
Right, that makes sense.
Yeah,
Is there options traded on the RSP? Is that a big options trader?
Let's see here. So no, I mean not huge. No, you've only got monthly expirations, and I mean, to put in perspective, 3,778 calls traded today so far.
Okay.
473 puts, so not really. And then on the QQ,
EW.
Yeah, I mean 86 calls traded all day today.
Yeah, you could do that yourself, right? Well, and that's kind of the segue into my next piece here, because I know you've been trading the tech names a lot of liquidity there, as you've said in the past, and you'd like that. But the last couple of trades I've noticed is more on the cyclical side, your MasterCards, Boeings, and stuff. So I'm just kind of curious, from a market standpoint, are you just seeing a little bit more opportunity in those cyclicals right now and some of the industrials rather than the tech?
For me, it was honestly, well, one, with the rebalance news yesterday, it was funny. I was off the desk and I was looking at all those big tech names, and I saw they were down, 1-2%, but the QQQ was up, and I was so confused until I got back to my desk and read about the rebalance. So, maybe a little bit of that. I think that's probably just a little bit of a blip on the radar with those big tech names. But, as far as MasterCard and Boeing, it was really just came down to a chart setup. If you look at MasterCard on the daily, that had been really kind of just consolidating around the key 395 level. And, today I had it on my radar for that reason. And I kind of just started to see it, build around 393 in the morning and then make its way up to 395. And, I don't want to jinx it because I still got a little bit of the trade on out there. But, at that point, if you get over that 395 after consolidating for a few days, in theory, 400 would become a pretty plausible target for a stock like this. And then it would actually be close to its all-time highs around the 401.5 area. So for that one, that was really just a chart setup. And I actually, MasterCard's kind of one of those where it's not too heavily traded on the options front, but a couple of years ago, it was actually my number one P&L stock. I just really enjoyed trading it on the options front, and you can get some pretty nice moves off of it. So I've just kind of always enjoyed it as a trader. You just got to kind of be careful sometimes on that one because the options volume can get a little light on you. I think there's plenty, but certain times it does get a little bit lighter. And then as far as Boeing goes, and I think if you look at this one on the daily, and I think you've talked about this one too, it's been kind of just consolidating there around that 20-day moving average, like the 213-ish area.
Yeah, it feels like every time you get a break of it, it's because of some headline about a production issue, and that people automatically start thinking that, the plane's crashed or whatever it might be. I feel like there's that aura still around Boeing that's been around now for about 3 years that just keeps people expecting some sort of big negative news out there.
Yeah, you're right. It can get a little funky to trade for that very reason. So I almost sometimes when I see a chart set up on Boeing, I almost just put a little asterisk beside it of just like, don't get too angry if it doesn't work out for you.
Headline risk or something, right?
Yeah. So, but what I had that on my radar, and I'd also liked Deere, and I'd also liked Caterpillar. And when you start to see a couple stocks within a sector, that's kind of what intrigues me, because if they all break out together, that's the strength that you're kind of looking for in an options trade. So this morning, Deere and Caterpillar did great out of the gate, and weird enough, Boeing all of a sudden was just down and looked like the stock was being kind of held down. And then all of a sudden the delivery numbers came out, and it just magically lifted up about 5 points. Funny how that happens on Wall Street.
Right.
So
the people know. People know.
So yeah, when I had liked the chart set up, and then when the delivery numbers came out, it made a nice move, saw some volume come in, and then kind of saw it sticking around the 213 area that had been consolidating around for a little while, and just kind of said to myself, well, some news is out, and it's got a good chart set up, and I felt like it was going to run. And yeah, sure enough, it moved up to that 217 area that I was looking for and pulled back. And yeah, it's still looking pretty strong. That's actually one that might be an intriguing thing to take into the inflation report. You've got a strong looking chart, making a nice move today. And, if inflation is hot tomorrow, you would think in theory that the tech stocks would get hit the hardest, and that the Dow might, be a little protected, take that with a grain of salt. So, entering into a Boeing like the 220 call might be kind of an intriguing thing to do this afternoon. So we'll see how that plays out. And I'm a little nervous though, because it has made a pretty good move here so far off of the delivery numbers. So I got to kind of be cautious with that.
All right, I'm going to have 2 questions for you on the comments that you just made. First off is Boeing. How do you differentiate that? What made you like that chart with it just grinding up against the 20 and then popping through it, as opposed to grinding up against the 20 and then failing to break above? What was it that kind of alerted you on that?
Are you saying this morning, or just when I was kind of entering into my trades, or looking at my charts last night?
Looking at your charts last night.
Yeah, I mean, I like to find when a stock is consolidating around those types of moving averages. I mean, that's just kind of I guess in a way, a classic technical setup. You make a move, and it hits that key level, and you get that 5 or 6 days of consolidating underneath it. Similar to where you'd find like a stock that might form like a rectangle type pattern underneath like a key like 100 level, let's say. So it just kind of looked like it was building right along there. And, kind of once those things have some sort of catalyst or you do get the breakout, that's when the algorithms tend to kick in and the buy systems are there. And I mean, you're seeing that on Boeing right now. I mean, it's actually pushing up to make almost, I think, the high of the day. So I love to just find things that are creating some sort of consolidation underneath key levels. And then you kind of just look for that moment where, the algorithms take over and the buyers consume the sellers and, away we go, or hopefully away we go.
Yeah, no, I mean, well, so far so good, right? So where do you stand right now in the Boeing? I know you're up about 100% right now. It's still up 100%.
So I had actually gotten out of the final contracts. It hit that
Oh,
217
yeah.
level.
Okay, so I missed that bullet point. Okay, my bad.
Um, yeah, so it hit that 217 level that I was looking for. It kind of started to slow down a little bit. Some of the buying volume dried up a little bit, so I was very tempted to roll up to the 220, and I have a feeling that I might end up kicking myself for not doing that, but I probably should have re-entered when it had that little dip down back to the 215 area. That would have made another nice trade. I get a little nervous sometimes when I've hit 100% on a stock for the day, because then I'm like, oh, okay, let's enter it again. And, all of a sudden I tend to lose 50% on the next trade and makes my
Right.
evening not as fun.
Yeah. Yeah. No, I hear you there. Um, so, so we talked Mastercard, we talked Boeing. Any The next question I had for you is just kind of curious as to your take on tech in general. And obviously, with rates going higher, that was quite a headwind for long duration assets throughout 2022. Not seeing anything like that in 2023. I'm just kind of be curious as to your thoughts on that. Do you worry too much about adages along those lines, or do you just try to kind of block all that out and watch the price action?
I generally just try to watch the price action. I try to be mindful of, when that 10-year hits 4, that's tends to be one of those types of levels that you can get some of those algorithms that are just going to kind of automatically kick in and take some profits on tech. So I try to be mindful of that. But yeah, I mean, at the same time, if I was sitting there watching the 10-year yield recently, you should be doing nothing but puts in theory, right? Because on
Yeah.
tech, because that would be a headwind. And, frankly, at times you would have had some hits here or there, but you would have been wrong for the most part. So mindful of it. Yeah, when we hit those key levels, I tend to be a little bit more cautious. But, at the end of the day, the meta chart's still kind of I don't want to say screaming buy because of the move it's made, but it's strong. So until things like that start to break, I'm more just looking at the price action.
All right. So speaking of price action, let's for today's segment, we're just going to kind of go through. We're going to take a deep dive into a Netflix trade that you did a couple of weeks ago, and just kind of explaining your thinking. It's just so anybody that's following Brandon's trades here can kind of follow along, get a fair idea of what he's looking at and how he might trade, and therefore, the more you know about Brandon's trading style and are able to adapt it, the better you'll be on your own trades in terms of not waiting around for a sell or a buy signal from Brandon and just being able to get in and out yourself. The old bringing a horse to water, right, Brandon? So,
Exactly.
let's take a look at Netflix, just kind of recapping that trade here from you. This would have been taken back on
This was on June 28th.
June 28th, right?
Yep.
So just taking a quick look, you had posted this. Let's see, you bought it at 10:15 that morning. I'm just making sure that there was. So you had bought it at 10:15. The 4:35 calls around 3:50. Then just kind of recapping the trade at 10:56. You took some profits as it had moved from 350 to 480. You'd followed up with a comment on that at 11:03, saying that you want to add a point to why you sold this, and we'll get into it a little bit deeper. But you talked about some of the ascending uh, the intraday ascending wedge, which is bearish formation. And in a strong market like this, it's possible that momentum pushes it higher versus breaking lower, as the pattern should suggest. But however, those calls were already up 40%. We're going to talk a little bit about reducing your risk there. So you ended up taking profits on that. Now you bought it again about an hour and a half later at 4:15. The calls were trading around 4:40. So you had about a 40% return on those calls, and you provided a little bit more color at 3:30 towards the end of the day. I don't believe you held it overnight, right? That was the end of that trade, just
Correct.
those two entries and the two exits. So I know that you were kicking yourself to a certain degree about some of the gains that you could have had if you had just stuck with it. But however, you had very good reasons, and the reduction of risk is sometimes the most underappreciated factor in trading. That people are always looking at what they missed, but they never really look at what they could have lost at the same time, right? So why don't we go through this trade here, and you could just kind of walk us through. I'm going to get into a 30-minute chart here, and I am going to scroll all the way back to that date, the 28th of June, and we're just going to kind of follow along the price action here as it went along. So here we go. So that was Wednesday, of course. I'm trying to think if there's anything in particular going on Wednesday. Obviously, that was the breakout day, I think, right? Where we had the broader indexes just kind of really rip higher into the end of the quarter, if I recall.
Let me check on that one here.
I think that was a strong trading day. Let's take a quick.
Yeah, looks like a decent move in the overall markets.
Yeah.
And
Yeah, this was we had been slipping lower, going from the 16th through the 26th. There was a little bit of profit taking going on. And again, we talked a lot about the 20-day moving average. On the 27th, that 20-day moving average was tested, and we launched off that, and that brought us here to the 28th. So we already had in place a little bit of a positive development going on in the broader market going into that trade. I'm assuming that had to factor into some of your trading there, Brandon.
yeah, absolutely. Again, if you look at Netflix, I mean, that's a real on the daily. I know you probably don't have that up because you went to the 30-minute, but that moved up and made a new high for the year and had a 1, 2, 3, 4, 5, 6, 7-day pullback, and then a doji candle right off of the 20-day. So, just again, with the market momentum that we've seen on these tech stocks, that's, in my opinion, a pretty good candidate as a pullback long. And then, what I'll do at night is I'll see that, and, I'll add it to my list of potential calls and potential puts. And, I usually will come up with, call it 10 ideas. And then I usually try to narrow that down because I try to keep my watch list as tight as I can. Unfortunately, I tend to find.
Do you have like a rule of thumb, like 10, 20 names type thing, or?
Yeah. So, because I use Thinkorswim. So when you create your own call list, so I have a call list for calls, and I have a watch list for calls and a watch list for puts. And on Thinkorswim, you actually have to start, pressing the down arrow if you have any more than 11 things on a watch list. So I never have more than 11 ideas per day. That was just a weird thing that I noticed with the system. And that way I don't have to ever do any scrolling. And I said, this is a way to just limit yourself. So yeah, never more than 11 on either watch list entering into each day for that reason. I try to keep it even less, but I tend to find a lot of stocks that I like. So I'd almost rather have more than less, and then I can just kind of click through them throughout the day. And, if things start to not look the way that I thought they were going to, I'll just eliminate them for the day and narrow it down even more. So yeah, this stock would have entered onto my radar. Again, just after that pullback, hitting that 20-day, I'll put it on my radar, and then, you never know what's going to happen the next morning. I could go to bed and, I could wake up in the morning and we could have whatever economic report comes out, or, geopolitical headline, and, maybe the market pulls back. But, I would at least have this on my radar, and then, probably put it towards the top of my radar for the first, 30 minutes, an hour, and kind of wait for my setup. Sometimes with these tech stocks, and frankly, I miss them, and I'm okay with it because it's just, they move quickly. Something like this with a setup could have just taken off out of the gate. And I don't know. The first 30 minutes of trading with options are, I think, a real love or hate. You can really make a boatload of money and make a quick double, but you can also just have things pull back on you so quickly. So,
Do you have a
in certain
preference?
cases, oh, I'm sorry.
Do you have a preference? Like, do you like letting the first 30 minutes kind of unwind, or if you see a setup that you like, you don't worry too much about that?
If I see something that it's just kind of one of those days where I'm like, all right, the market's just, it's going to be one of those 2% days. I never know for sure it will be, but when you start to see certain signs, like maybe it's an inflation report that's out of the way and things are looking strong in the pre-market, I might be a little more willing to just jump on something right away. But lately, I've enjoyed letting the first 30 minutes just kind of settle a little bit. Honestly, I think it's really helped with just stress and anxiety of trading.
Yeah.
So
I do the same thing, because there's numerous times where I just get whipped out of a position just because I don't know if it's lack of volume or what the scenario is, but I like to allow things to settle, especially if you got like a big 10 a.m. data point or something along those lines. I don't feel the need to jump in front of that myself.
yeah, no, I would agree. I mean, if you get to those points where you can kind of just tell the market's been building, and then, maybe you have like a Nvidia or something and it closed the day before at the absolute high and it's got that clean chart and it looks like it's about to break out. If you don't get in the first 30 on a stock like that, you're probably going to miss a pretty big move. But again, I've become a lot less stressed with trading and more just relaxed in general of just not touching the first 30 minutes. So I kind of just tell myself, like, you know what, there's so many trading opportunities throughout the day that if I miss some at the beginning, like whatever, we move on and we find another.
Yeah. I mean, that is one of the biggest things that people have to always, kind of remember. It's like, don't get upset about the ones that you missed. Worry about the ones that you could still take, right?
Yeah, exactly. And, especially these days too, with some of the movements that these stocks like Nvidia make, just like looking at it. I mean, since you have the Netflix chart up, I mean, if you had actually waited, perfect example, if you had waited until 10:05 today and you could have gone out and bought the 440 calls, and you probably would have made a very nice return between 10 o'clock and 11:30. And you could have gotten out of that and called it a day with that stock and revisited it later. So, again, that's a perfect example, coincidentally, on Netflix today.
Yeah. Well, let's circle back to the 28th, Brandon, and kind of walk us through your thinking on that trade throughout the course of the session there.
Yeah, and like you said, I think kind of the purpose behind this is kind of a scary place sometimes, but I guess taking a trip into my mind and how it works.
Yes. We'll turn to the psychiatrist afterwards. But
Nice.
and if
That's
we have
awesome.
any subs out there who are psychiatrists and looking for a new patient, here we go.
I guess traders would be a pretty good fishing ground for the psychiatrist.
Yeah. Well, you ever watch Billions?
Oh, love it.
Yeah. There you go. I mean, that's a $1 million profession in itself, dealing with some of the traders.
Exactly. So, yeah, part of the reason too is, I have trades sometimes that I make a recommendation and they continue to soar, frankly, and I've gotten out of them, and I'm sure that people have said, well, why did he do that? Why did he get out? And then on the flip side, there are plenty that, I say to get out, and then, they come back in. So, this was just kind of give you a little bit more again, what I'm thinking on a particular trade. So on this Netflix trade, so here we have a trade that's moved up about 40% in a fairly quick time frame. The market had actually started to look like it had a good day, but at the time, I think it had started to look like it was going to pull back in a little bit. And Netflix started to form an ascending wedge, so a bearish formation. Now, on a tech stock, if that technical formation breaks, it tends to break very quickly. Sometimes almost just too quick, that if you're not like set up with, stops in place or you're an algorithm, it sometimes just happens so quick that 40% could have easily just evaporated in one candlestick. So I saw it forming. I was up 40%, and we're entering into towards the holiday weekend. So I just took my money and ran. So
let me ask you on that point then, Brandon. So when you're taking Netflix, are you setting out? I know, Fibonacci trader, he sets the Bollinger or the Fibonacci level for profit taking, right? Do you have levels that you're eyeing out beforehand, or are you more concerned with the intraday chart and how that unfolds?
I have both usually. So I do have a lot of preset lines on my different charts of, various, I don't call them pivot points, resistance levels, moving averages, whatever it might be. So like, for an example, on like a Netflix, I might have a line that I've created that says, 20-day moving average, and I'll just write that right in there. So I'll see it. So I'll know that that's a particular key level. So I have them on the daily basis. So I just kind of know my levels going into the day. And then in addition to that, let's just say some sort of intraday pattern kicks into a stock. Let's just take a triangle, because I like to trade those. If a triangle formed on a particular stock and the technical rules gave it a target of 1 point higher, then that would become my main focus. Usually I'm going to get out at that particular level, because at that point, algorithms are going to shut off. Not all of them, but if you have technical traders that are out there looking at intraday patterns that have certain targets based upon true technical rules, you're going to have some people that are just automatically going to take profits at that level, or they're going to stop buying at that level. So, maybe if the market's really zooming higher, I might try to push it a little bit. But when I see those things, that really becomes my new intraday target. And again, I'll factor it into other things. Let's just say a triangle forms and it's got a target of $2 based upon technical rules. Well, if all of a sudden I see like the 50-day moving average or something that's like, 1.5 points away, that's usually a pretty major level. I might adjust accordingly, or I'll get closer and you could maybe tighten up your stops or whatever. But I'll be mindful of those two things combined. So yeah, I have all those things kind of loaded up into my charts already. And then we've talked about it before.
Do you do a lot of trimming and trailing?
I haven't done it quite as much lately. I actually, for a while, I feel like I ended up burning myself a little bit on that, because
Set your trails too tight.
It was more so that like on an option, because they move so quickly, if all of a sudden you get up 50% on an option, well, you all of a sudden, if you were to trim some of that, you all of a sudden got this mentality that I'm up 50%. Well, perfect example here on Netflix. If you had held on to that trade for much longer, you would have all of a sudden been down, 50%. So if all of a sudden you got to be careful, I think, with that mentality, that if you hit a good portion of your trade and then you start to trim, you do need to make sure that you're managing the rest of that, because if the rest of the trade moves against you, it tends to wipe out the good portion of it. And that's just super frustrating. So I haven't done it quite as much as I used to be honest with you. So yeah, on this Netflix, so it was up 40%, decided to take money and run. And then I went back and I looked at one of the ways that I analyze some of my trades is I actually go back and look at the option chain, and I look at the option chart for the particular strike that I was in. I usually analyze to see whether I picked the right strike, if I held it, for the right amount of time, if I was early, late, all of that stuff. So I went back and looked at this. So at 10:56, you were up with 40% profit. By 11:10, you would have actually lost $1 per contract. 11:20, you were back at 40% profit. And if you'd held on to it at 12 o'clock, you would have been up about 100%. So, it's part of options. So this is not a complaint. I mean, this is the reason I got into them. But this is the type of volatility that you see. So, sometimes when you all of a sudden dip back where you've lost $1 per contract, sometimes that doesn't come back, and that 40% gain is gone. So, again, I saw a potential bearish technical pattern. I was up a decent amount and I just decided to cut and run. And, for me at the end of the day, would I rather have had that turn into a double by holding on to it for an hour? Yes, but I had to be happy with my 40%.
Yeah, not looking a gift horse in the mouth, right?
No, I've done that enough with options.
Yeah, there's a ton of examples we could throw out on that, right? Or metaphors, I should say. But so yeah, so you decided to take now. Did you have any sort of risk methodology that you're using on that in terms of you're just kind of when you get into these trades? I'm not on Thinkorswim myself, but do they have an options calculator that you kind of just following along, checking your profits and stuff like that? Or how do you kind of follow that on an intraday trade?
Yeah, I kind of stopped using the calculators and stuff just because feel like I started playing the game where I'm like, well, if I go out, 25 strikes and buy this penny option, then it moves to this, stock price. I can do really well. Yeah, for me, it's just kind of just staring at the position in my account and trying to watch watch the chart like a hawk. And then like today, on the MasterCard trade, that's probably a good example. All of a sudden it's up, call it almost, I think it was like 35-40% we ended up hitting. For me, I didn't throw out the recommendation to trim because it was at a certain, target level or, risk level, whatever you want to call it. For me, I kind of started to see it stall a little bit. I still like the chart as a potential move to 400 this week, barring CPI not being scorching hot tomorrow. So I just kind of started to see it stall a little bit. I still like the chart, but it was up 35%. And for me at that point, it was like, okay, this has been an okay trade, not a home run, up 35%, and you're seeing the stock kind of stall a little bit. Let's just take a little bit off the board, to at least, like you said, to at least protect yourself a little bit, because that is really the name of the game in options world.
Yeah, just seeing that's dipping down a little bit here. So let me ask you on this. Now, you said 400 this week. So you see a move like this, kind of a rejection at the 397 level on an intraday pattern, hardly a aggressive rejection. Does this get the blood flowing in the brain? Does have you thinking at all or anything? Or are you not really too concerned? It's like at a 5-minute chart here.
Yeah, I have the MasterCard sitting right in front of me on Thinkorswim too. So now I've got it on not only one, but two charts on both my left and right eye. And yeah, I'm not going to lie. It's kind of got me thinking a little bit here because it's now breaking below that 20-day moving average on the intraday chart. And, that last candle, it's not something to maybe hit the panic button, but it's not
catches your attention.
Yeah, it's not the cleanest candle that you want to see when you're bullish. So yes, I am debating this trade in my head.
Now, you mentioned that you watch the chart like a hawk. Is there times that you just are like, I got to walk away from this chart, otherwise I'm going to overthink it?
Yeah, that is easier said than done too.
Easier said than done. Correct. I agree. I agree. So all right, well, this is good just for getting the real time thinking. But I mean, so when you're looking at it, what time charts are you looking at? Like, for instance, I like kind of going from a 5 to, and then I'll go 10, 30, 60, 120, 240, and I'll kind of walk my time frame out just to see if there's anything that I'm missing here. Like, this is the 30 minute, then pop out to the 2 hour chart and just kind of watch it. Do you ever do anything like that in your trading style?
Yeah, intraday, I'm mainly looking at the 5, the 15, and then the hourly. So those are the main ones that I flip between. And then when I do my homework at night, I start with the dailies. And then anytime I do my homework on a Sunday night, I also will put the daily and the weekly beside each other. But yeah, intraday, I'm looking at 5, 15, and hourly mainly.
So I'd be curious, is for your homework, how do you start? Do you just go off that watch list of 11 names, or is there anything in particular that you're looking at to kind of start to get the homework underway?
Yeah, so I have a couple of watch lists that have, call it 100+ stocks on there. Just your usual names, the ones you see from me a lot, the tech names. Something like, Snowflake was one I used to like to trade a lot, or I'll have a couple of the like industrials on there, like Boeing. So a little bit of a smorgasbord of just stocks that I have enjoyed trading throughout the years. And then I will actually go through each one every day on the daily at night. And then on the weekends, I'll go through the daily and the weekly. And then from there, I usually just kind of whittle it down to, it ends up maybe being 15, 20 names. And then I'll go back and look again and, see what I missed or what I like or don't like. And then, I'll have a few names that will pop onto my radar from various technical screens that I might run. Or maybe, I'll run across some chart with like a really nice, like, reversal candle or technical pattern set up on it that will pop onto my radar. And then, I don't really read the news. Well, I read the news a lot, but I don't kind of read some of the, I don't know, call it the CNBC type stuff of, financial fluff. But
Yeah.
you might have a headline that will pop across your radar that will put something onto my radar, like, hey, this might run tomorrow off of this news. So kind of all those things. And then I try to whittle it down to my best choices.
All right. Let's see. Anything else on this Netflix trade, or anything else on your homework or trading thoughts there, Brandon?
No, I think we've about covered it on the Netflix. Yeah, again, I guess that kind of makes me think of something too that I wanted to mention on that in particular. Kind of like you said at the beginning, if you don't need to wait for me for a trading recommendation. I mean, some people are very happy with making 40% on your money in an hour. And if there's ever anything that I do that you like and you want to get out, and just, get out. And if it's moving against me and, you don't like your losses, just, just get out. Because again, it's tough. As I've mentioned, I've had some similar scenarios recently where I decided to stay with the trade. A Zoom and a HD recommendation from a couple weeks come to mind where, they were up 30 and 50% within an hour, and those vanished. And I thought I had more upside to them, but unfortunately they vanished. And, in the Netflix case, that ended up climbing higher. And that's unfortunately a part of trading. And just some of these options just move so quick that, my sink is literally 2 feet away from my trading desk. And sometimes I go to get a cup of water and I'm away for all of half a second and things have moved. So, again, just if you're happy with something, just pull that trigger and call it a day.
Yeah. Just keeping an eye out here on the markets as we slip below that 44.56 area. Not seeing anything out there for what it's worth. I know Nick Tamaros just tweeted out some CPI estimates from some of the different brokerage houses. I was reading through the Goldman earlier, and all of them expecting a slightly lower read on that. So not seeing any headlines that would be associated with this break, just kind of a little bit of a slip through the moving average, getting closer to that 44.50, which is kind of where I see us bottoming out and then bouncing. So see a little uptick in volume there, but that could just be my chart. You seen an uptick in volume, Brandon, right around 215?
I am. Yeah, actually, like on the QQQ, almost triple the candle before. I'm talking on a 5-minute basis.
Yeah. That broke below its 50 and 20 200-day intraday, right?
Yep.
Right around that point in the Qs. So we'll keep an eye out on this. I'm not getting overly concerned. It could easily just be one seller in there that just kind of disrupted things. Taking a look at tick data, not seeing any tick data here that's raising a big red flag. So I think it was probably just the idea. Brandon, I know you were just talking about this earlier about maybe somebody knows something here, and I just think it was because volume was so low across that I don't know if it's somebody that knew something or just happened to have a decent amount of money there. So
yeah, either that or they're reloading because they know CPI is going to be cool.
yeah, exactly. So we got down to about 44.51 and change there. So we'll keep an eye out on this, but not seeing any headlines that have me running for the hills. All right, Brandon. Anything else that we didn't touch upon on this session here?
Yeah, just actually a couple more quick things here. I'll be
Certainly.
quick.
Take your time.
Yeah, so we've talked about this a lot, rolling, and we'll do a separate segment on this. But rolling can be applied to a lot of these situations on when you're sitting on profits or you have these technical patterns that come to fruition with different targets and you hit them, but you want to stay with something. So again, just one of the many reasons that I like to roll, because you're at least protecting some sort of profit and some sort of capital in some way, shape, or form. So it always stings a little bit less, if you do roll and take some off the table. And then just a final thing is, one of the first things that my mentor stressed to me was, you can always re-enter a trade in any of these scenarios. Like I could have easily gone back and re-entered into a Netflix trade. Again, I don't always love
Let
to
me
do
ask
that.
you one quick thing. Do you find it difficult if you banked profits and then it ran a little bit more to re-enter? I do personally, in terms of I'm like, oh, now I'm chasing and like I get if the setups there, but does that ever make you concerned?
Yeah, I mean, I gotta be honest with you. Sometimes, and I probably hurt myself here, but I think from this just stress management and account management, if it works for me, it works for me. I mean, there are times where I actually will take a stock off of my watch list for the day, just so I don't do anything stupid with it. So yeah, no, I get very hesitant once I've had a nice trade on a stock to go back and re-enter it, because it just, I don't know, just always feels like it moves against you when you do that.
Right. I agree.
But yeah, again, you can always go and re-enter a trade, and yeah, kind of similar to what you were saying along those lines of a different thought. Maybe don't go and re-enter a trade on something too many times on one day, because I think if you kind of start chasing or you keep missing it, you kind of start to think irrationally, and then you just start pressing that buy button, and that is just a recipe for disaster when it comes to options. So it's just maybe a little caution on that front.
All right, now that's definitely a good word of warning for people. That's for sure. So, all
And
right,
I
Brandon.
think that covers everything.
That covers everything for this session. All right, and here we are getting just about down to that 44.50 level here in the S&P September contract. So keeping an eye out on that. S&P still up 0.17% on the session, and the Nasdaq that has now slipped into negative territory, down just about 0.12%. But overall, at the end of the day, Brandon, a relatively uneventful day with CPI lurking in the wings there. So, go on.
Yeah, no, I would agree, and I don't know if it's going to get any better this afternoon into the close, as we talked about at the beginning of the hour. So I guess we will see, though.
Yes, obviously worth keeping an eye out on. We'll see if you're still planning on throwing out a lotto ticket there. What would some of the names be on that lotto ticket potential?
Yeah, I mean, the Boeing name is kind of catching my attention. Again, just because it's looking really strong on the daily chart now, and through this pullback, I mean, again, this could change in the blink of an eye, but it's kind of holding up pretty well right now. So that's one. And I mean, I still do like this MasterCard setup. So I still have a piece of that. That might just kind of become my lotto, so I don't have to add any additional risk overnight. And that's kind of a good maybe point too. I'll add real quick. Carrying the risk overnight with potentially rolling an option or trimming. It stings a lot less if I'm totally wrong about the CPI report, if I've taken some off the table, or if I've rolled an option. It just makes me sleep a little better at night that I've protected myself a little bit. So, yeah, might end up sticking with just the MasterCard name, but once I get off the call here, I will start diligently looking at charts and seeing what I can come up with.
And we'll be diligently following you to see what you do come up with, Brandon. So it's always much appreciated. I know the subs appreciate all your good trades that you're putting out there. So, and for you also taking the time to speak with us on audio here. So much appreciated, my friend.
My
All right,
pleasure.
we will let you get back to your chart watching there. We are going to be shutting down audio just temporarily, and I will get up a copy of a replay of Brandon's discussion here. A lot of helpful tidbits going on in there. Some great advice on the trading front, particularly on options. So I definitely highly recommend, if you missed anything, to kind of scroll through it back again, give it another listen to, as a nice educational piece. So Brandon, thanks again for joining us, and we'll talk to you soon.
All right. Thanks, Kevin.
All right, bye-bye.